In this video, we are going to talk about Bollinger Bands, how to set them up and how to trade using Bollinger Bands. But before you get right into today's business, I want to say a huge thanks to all of you guys for your support. Please continue subscribing and I'll continue making videos so that it can be easier for you in your trading journey. So let's get right into today's business. Bollinger Bands were developed as a tool to help traders identify potential price volatility and relative high or low prices in relation to previous trades. These bands provide a relative definition of high and low prices and can be used to identify potential overbought and oversold conditions. So Bollinger Bands consists of the upper band, the middle band and the lower band. So let's start by setting up Bollinger Bands. The first thing that we have to do is let us remove these Bollinger Bands and let me show you how to set them up. So as you can see, now we have a clear chart. Then we go to our indicators on our main chart and then we select Bollinger Bands. On period, we select period, that is the standard period that we use, and then on deviation you can choose 1.986 or you can just choose 2.000, and then shift you just put 0, apply to close, and then the other things you just leave them as they are. And then on the color, let me just put this blue. Right, so this is the setup of our Bollinger Bands. So let's move on to the key features of Bollinger Bands. The key features of Bollinger Bands are the spacing between the bands and their relative positions to the current price. When the bands contract, it can indicate a period of low volatility, often referred to as the squeeze. When they expand, it suggests increased volatility. So the first thing that you have to consider when you are using Bollinger Bands is we have 4 main setups of Bollinger Bands. The first one is known as the Bollinger Bounce. The Bollinger Bounce is one of the most common strategies in the Bollinger Bands strategies, which capitalizes on the nature of the bands to act as support and resistance levels. Price tend to bounce back from the outer bands. As you can see right now, if we zoom in, when prices touched the upper and the lower band, it tends to bounce back towards the middle band. So this is considered the Bollinger Bounce, when the upper band and the lower band act as support and resistance. So usually you can just decide to buy or sell when the market touches the lower band and the upper band respectively. And then we'll move on to the Bollinger Squeeze. The Bollinger Squeeze denotes a period of low volatility and is considered by traders as a potential indicator of future increased volatility and possible trading opportunities. So the Bollinger Squeeze, let me show you a setup of a Bollinger Squeeze. Like for example, at this point, this is known as a Bollinger Squeeze. This is whereby the upper band and the lower band contract towards the middle band. This shows trading opportunities. When the market breaks up or when the market breaks to the upside or the downside, it denotes a potential uptrend or downtrend. For example, if the bands squeeze together tightly, it could be an indication that a breakout, either upward or downward, might be imminent. So you can use this as a strategy that you can in conjunction with other setups. You can just use this because there is what we call as the squeeze. And then we move on to the third one, which is riding the bands. In a strong uptrend, price might ride the upper band, and during a downtrend it might ride the lower band. This can be a signal that the current trend is strong and might continue. Like for example, let me put another example. Like at this point, let me put an arrow. As you can see at this point, it is known as riding the bands. It is a point whereby the market is moving very close to the upper band or the lower band. In this case, it is the upper band. So it means that the bulls have power and they are very strong. The trend is still going to continue going up. So you can use this one also as an indication that the market is still going high. And then the fourth one is known as the Bollinger Band breakouts. Traders might buy or sell securities when the price breaks and closes outside the bands. So as you can see, let me put another example. As you can see at this point, let me put another arrow. As you can see at this point, this is known as a Bollinger Band breakout. It's a point where the market closed below the lower band, which means, as you can see, this red candle, it closed below the lower band, which means that the market is bound to return back into the Bollinger Bands towards the middle band. So for example, if a stock price closes above the upper Bollinger Band, some traders might view this as a sign to sell, anticipating a pullback toward the middle band. Conversely, a close below the lower band might prompt a buy order. So this is it. The market closed at a point that is below the lower band. So it means the market has to go back into the Bollinger Bands. Therefore, you buy at this point. If you can buy at this point, let me put another line. If you buy at this point, it means you ride the market up to this point, to this middle band. So you can enter at this point and then leave at the other point. So this is it for the Bollinger. And another example of a point where the market closed outside the Bollinger Bands is this one. At this point, the market closed below the lower band, which means we are aiming for a buy. As you can see, the market started to buy, going back towards the middle band. So this is it for Bollinger Bands. Then you have to consider the other thing. When utilizing Bollinger Bands, it's always recommended to use them in conjunction with other technical indicators or a method to confirm signals and make more informed trading decisions. So basically, you don't have to use Bollinger Bands alone. You have to use them in conjunction with other indicators, like for example the stochastics or the moving averages, so that you can make more informed decisions. You can also use price action. That is another good strategy that you can use. I prefer it myself. So that was it for today. Let me know what you think in the comment section below. Please don't forget to subscribe, hit the notification bell so you won't miss out when there's an update. You can also link with me in my WhatsApp channels and my Telegram channels. The links are in the description box below. See you in the next video.